Hello my fellow accountants, welcome to our video channel Data Smash, where we help you smash data down to easy understandable kind of data. I'm JX Underwood and I'll be your host and study buddy throughout the duration of this video clip. Today's topic is, what is cash and credit transaction? Okay, before we start on cash and credit transaction, I just want to quickly explain what transaction is. A transaction is a mutual exchange between a buyer and a seller. The seller would sell goods or services to a buyer, and in return, the buyer would pay the seller with the amount agreed to. Now, how this transaction turns into a cash or credit transaction depends on how the buyer pays. A cash transaction occurs when the buyer pays the seller immediately after the sale of the goods. And the key word here is immediate payment. A cash transaction occurs when someone pays immediately. So for example, if you were to go to the store and bought a can of cola and you paid in coins, that would be cash transaction. Cash payment can be made by notes and coins, debit card, credit card, or even a check. Wait a minute. If a cash transaction means paying for goods or services immediately, how can a payment by a check be counted as a cash transaction, as it takes 3 days for a check to clear? It is because when a check is handed over, a payment is made, and that payment is permission to take the agreed sum out of the buyer's bank account. Thus, a payment has been made immediately, and that's why a check payment counts as a cash transaction. By now, you may have guessed what a credit transaction might be. If you haven't, don't worry, I'm still going to explain what it is. A credit transaction occurs when the goods and services are sold to the buyer, but the payment from the buyer to the seller is made at a future set date, an agreement between the buyer and the seller. This sort of payment is known as a credit payment. For example, a friend of yours asks you if you want to buy her games console. You want to buy the console off her, but you don't have enough money to pay for it. And so you decide that you'll buy it off her next month when you do have enough money to purchase it off her. However, your friend decides to give you the console now if you agree to pay the full amount by next month. So in conclusion, a cash payment is when the payment is made immediately, and a credit transaction occurs when the payment is made at a future date agreed by the buyer and the seller. If you are unsure about cash and credit transaction or have any questions that needs answering, please leave a comment below and we will try and get back ASAP. Thanks for watching the video. I hope you've learned something. If you think you've smashed it, there's a link on the right of the screen. If you click it, you'll have a short test to determine how good you are at cash and credit transaction. And please, if you like this video, please show your appreciation by pressing the like button. And if you want to learn more about accounting, please press the subscribe button.